It's Martin from Risk of Value, and today I will talk about the effects of inflation. So, what will happen if inflation hits, and how can you protect yourself? I will start with the simple stuff. If the money supply expands, also the CPI index goes up. So things become more expensive in the long run. We can look at this in different ways as well. So if the money supply goes up each year with a given percentage, then we will have inflation in a given percentage as well. Now let's see what will happen with different asset classes. I will start with a moderate inflation example, the one which happened in the US in the 70s and 80s. And after that I will switch to the hyperinflation to compare the two, how we can maintain our purchasing power in this situation. Now clearly in the mild inflation or moderate inflation environment, if we put our money in the stock market, then we will maintain the purchasing power. So you can see that the CPI index increased really similarly to the stock market. Actually, the stock market even outperformed a little bit. So we make money in this situation. When interest rates are hiked, then we can expect a correction in the stock market. Now the question is, if a moderate inflation stops, how can we stop it? And the answer is that interest rates need to be high. And actually, Paul Volcker hiked interest rates to 21% to fight inflation, and he was successful. If we take a look at treasuries in the 70s and 80s, we can see that the yield went up really high to fight inflation. So we know that treasury yields during an inflation period will go up, so it's a bad idea to invest in treasuries. Now, what about gold? Gold could be a good investment when the inflation starts, and it will maintain your purchasing power. However, whenever interest rates are high, then you can expect a gold sell-off. What about housing? Housing will also maintain its value. However, when interest rates are high, you can expect a drop in housing prices, and the price of housing will go up because of the inflation. However, the prices of other goods probably will go up faster. So the CPI will increase faster than the price of housing. Now, if you can lock in low interest rates for 30 years, then it's probably a good idea to invest in housing. However, please do remember that in the 70s and 80s we did not have a housing bubble. House prices compared to median income and so on were quite cheap. Now it could be a different story. If we take a look at the home prices, inflation-adjusted home prices, we can see that it's almost flat. Now what happens in the other scenario when interest rates are not high, so they remain low, and the printing of money also accelerates? In that case, we have Weimar or Zimbabwe style hyperinflation, and the picture changes quite dramatically. What about the stock market in that case? The stock market will go up really steeply in that case. However, you still might lose purchasing power because the CPI goes up even faster. For example, the Zimbabwe stock market was the best performing stock market in the world in Zimbabwe dollars. However, if you take a look at the same stock market in US dollars, then you can see a drop in it. Now, it is also important to notice that after a huge devaluation in a currency, the stock market usually becomes really cheap, and that's the time to buy. However, if you hold your wealth in that money, you already lost your purchasing power. So you need to move your wealth in some kind of other currency or asset and start to buy the stock market when it became cheap because of the devaluation. What happens in gold in this case? It's usually a good idea to start to buy gold before the hyperinflation starts. That will maintain your purchasing power, and it's a good idea to sell your gold and move to other asset classes before the hyperinflation stops. However, even if you do remain in gold, that's an acceptable investment and you will maintain your purchasing power. Now, what about housing? If we take a look at this picture, we can see that at the beginning of the Weimar hyperinflation, about 30% was spent on housing in an average household or rent, and 30% on food, and the rest the money on other stuff. Now, at the end of the hyperinflation, 0.2% were spent on rent, and 90%, more than 90% were spent on food. So whenever hyperinflation hits, the price of housing will go up in that currency. However, in other currencies, it just plummets. So the rents and the price of housing will plummet. Still, it could be a good idea to invest in housing. If you can borrow money to buy a house with 0% down and lock in interest rates at a really low value, let's say 4%, then inflation will get rid of your debt and you remain with the asset, the house. Key takeaways here. So what will happen if inflation hits? Where to be? The stock market could be a really good investment if it's only a moderate inflation. However, expect a correction when interest rates are high. Bonds are the terrible place to be. Housing or real estate could be a good place if you can lock in low interest rates. So if you can lock in for 30 years your mortgage, then it's a good idea. Gold, usually it's a good hedge for inflation. However, when interest rates are high, then you should expect a severe correction in gold. What happens if hyperinflation hits? Then the price of everything will skyrocket. However, if you measure it in other currencies, then the price of almost everything will drop. Because of this, you should switch your assets to some kind of foreign currency if you can, or gold. And buy the stock market when it became really cheap because of the currency devaluation. However, you need to switch to some kind of other asset to be able to buy the cheap stocks when they became cheap. In this case, the price of housing, real estate just plummets compared to other goods. However, if you can finance it with really low interest rates, sure, buy it. It's almost just like a free house. If you can buy a house, lock in interest rates at really low, and hyperinflation hits in the next 2 years, you just got a house for free. I hope that you enjoyed this video, that you find it useful. If you do, please give us a thumbs up, check out our other videos, subscribe to our channel, and visit our webpage to learn more. Thank you. Bye.